watching Buy Now, Sell Now. I'm with you, Kavita Thapliyal, and today, yes, we'll be answering your stock-specific question, but then let's quickly get on to the management of CG Power, who's here to talk to us about their numbers. Numbers have really missed the street's estimate. Margins have weighed due to one-off charge, although railway Kavach is near the commercial launch, and we're also looking at a robust order book. We're also joined by Mr. Amar Kaul, Group CEO and MD, CG Power Industrial Solutions. Hi, good morning and welcome to the show. And let's talk about the price hikes. Now, given the recent 5% high spike in the motor segment, do you anticipate needing further price increases to fully offset raw material inflation? And how is the market responding to these hikes?
No, I think this increase is primarily as we have a very, very structured system of balancing any inflation that happens. How do we pass it on to the market? That's what we always keep our eyes on. So this 5% or even something that was done before, the market is accepting it pretty well. And the reason being because market experts, everything is so transparent. So it's not that we want to make extra buck and do that. So if the raw material is going up, obviously the customers are accepting it. So I think that's going on very well. But there are other levers for if their question is hinting towards margin expansion or something. I think there are other levers other than just the pricing game.
Got it, Mr. Kaul. Now, regarding the one-off 20 crore provision in the railways business, are there any other legacy developments or projects that could require a similar provisions in the near future for you?
See, I think technology with advancement in technology that's happening and important is to keep accelerating the development process. So if there's a delay, then obviously you become obsolete at some point of time. So it's very, very important to keep staying on track with it. Now, to your question, will there be more? I don't know today because it comes purely basis how we progress. How does the government look at it? How does the customer look at it? So I think that what we are honing our skills on is accelerate our development process so that we don't lose on the race on that. So I would say that one case is already gone. So we should be in a better situation as we get forward.
Right, Mr. Kaul, CG Power has a big unexecuted order backlog. Now, how do you see execution going ahead? Do you foresee any supply chain capacity or execution bottlenecks that could affect revenue conversion over the next few quarters?
I don't see that's a concern. And why do I say that is basis what we have proven already. Just 1 year back, 4 quarters back for transformer, for example, we were at 22,000 MVA capacity, and today we are already proven about 65,000 and ready for 75,000, and we are adding more and more. So it's not only adding capacity, it's also that we are executing at the same pace. So I don't see a concern on that. I think the teams are fully geared up right from end-to-end supply chain to make sure that we are serving our customers.
Got it, Mr. Kaul. But can you also provide more clarity on the commissioning timeline for the additional 45,000 MVA transformer capacity? And also tell us whether the current order pipeline is sufficient to ensure healthy utilizations once this capacity comes online.
So the capacity is actually, I would say, is at least 1 year ahead of the timeline because what we have declared it will be ready by financial year 27-28. But with current progress that I see, I think we should be ready at least a year ahead of the plan. So stay tuned with us. We will soon be announcing the inauguration of that facility. And in terms of how do we fill it up? Yes, it's already getting filled up. We see strong pipeline also of the orders that is further going. In fact, we are looking at further expanding more than 45,000 also. And when we are ready, we will definitely let you guys know.
Right, data centers are emerging as a massive growth driver for power systems along with the renewables. How big of a contribution do you expect data centers to make to your overall power systems revenue going ahead?
No, it'll be a well-rounded. Definitely, you're right. The data center, renewable, oil and gas, utilities. So I think these are a mix of customers that we will always have. We'll never get skewed towards one side only. So. But yes, I think the latest chunk that I have seen, especially from the export side, we see a lot of orders coming in from data centers.
Got it. And on that note, with the G1 outsourced semiconductors assembly and test facility now being operational for you, when do you expect the semiconductor business to now turn profitable?
So if I would have mentioned that before as well, so semiconductor and the chip making or OSAT facility, it's a long gestation period. And we are geared up for that. We are very clear that for next 2 to 3 years, when we started off, we probably will not make any money, and that's fine because this is a new technology that we are bringing into the country. But the speed at which the team has been accelerating is phenomenal. Like in July itself, we inaugurated the G1 facility. I think right now they are ramping it up. The exports have started from there. We are looking at getting more and more customers acquired to ensure that we are filling up the factories also. So it's going to take some bit of time. I think there's a plan up to 2032 that is there, and it's gradually showing how the production will be ramped up, how the orders will come in, and where do we break even and do that. So we'll keep you informed as we get closer.
Right. Assuming Kavach approvals come through in the next 4 to 6 weeks, how quickly can GG Tronics scale up manufacturing and begin commissioning these systems now?
So manufacturing is already happening in parallel, by the way. I think we are setting it up. And right now, what we are starting off is that every day we should be producing about 6 sets of Kavach so that the same can be installed and commissioned. So I would say, if not fully in this quarter, definitely in the next quarter, it will start showing the results in terms of receiving the money also. I think definitely invoicing will start off, but I would say it'll take a few days. So I think to your question, we are almost ready for the manufacturing piece of it. Installation, commissioning, the teams are at the sites. So everything should happen in tandem, in parallel.
All right, Mr. Kaul, you sure have a lot of interesting developments coming up for investors to watch. But tell us, what specifically should we be looking forward to in the upcoming financial year?
No, I think I just keep saying that stay invested with us if you're looking at long-term sustainable company, and that's what we are. We have never look at short-term for a quarter or anything. We always invest and look at the long-term thing. Thank you so much for having me here.
All right, Mr. Kaul, thank you so much for answering all the questions and taking your time out today for us. And all right, so that was the management of CG Power, but then it's time for a short break, and post that we'll be answering your stock-specific question. Jigar Patel, Gaurang Shah, our guest on the show, will be live with us, and if in case you haven't yet started sending us your queries, please do that. The number is flashing on the screen. In fact, it's a QR code that you need to scan, and you'll be connected to a WhatsApp number where you can directly send across your question, write on the name of the stock, the price at which you bought it, and the timeline till when you want to stay invested.
Welcome back. You're watching Buy Now, Sell Now, and I'm Meryl D'Souza along with Kavita Thapliyal. And this is the segment of the show where we'll be addressing all of your specific stock-related queries. And joining us today are, first of all, Mr. Jigar Patel, Senior Manager and Technical Research Analyst at Anand Rathi Share and Stock Brokers, along with Mr. Gaurang Shah, Vice President at Geojit Investments. A very good morning, gentlemen, and thank you so much for joining us today and addressing all of our viewers' stock-specific queries. And with that, let us dive right in. We've got our first query coming in from Shrikant from Hyderabad. The stock in focus right now is Paytm. He's holding about 100 shares, and his entry price is at 1,376. He's also been holding since the IPO and was earlier waiting for a bonus announcement. He wants to know what should his strategy be going forward for this company. So starting off, Mr. Gaurang, what is your view on IPO, on Paytm? And where are the levels since the IPO now?
Hi, Meryl. Thank you so much for having me on the show. Morning to all your viewers and to you and to Jigar as well. A small mandatory disclosure as required by SEBI. All recommendations that I'll be sharing with you this morning on your show, Meryl, they are part of our fundamental research team recommendation. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients, they might have their investment interest. So if I heard you right, Meryl, he got in at the IPO, and post IPO, if I'm not mistaken, and I stand to be corrected, there was a decent amount of correction on fallback of certain concerns and news flows. This gentleman stroke investor had an opportunity to add to it. But having said that, anyways, lost opportunity is lost opportunity. On the fundamental side, as a disclosure, we do have a positive coverage on 197 communication, that is Paytm, known as. And we believe that, though this looks to be a little bit crowded environment in terms of payment interface, but the kind of presence and scope that Paytm has over a longer period of time. On and off, certain regulations tend to bother this particular sector because of certain changes, upgradation, and concerns. But if you're a long-term investor, first of all, stay invested. If the stock slips maybe sub 1200 and closer to 1100, and if you do have investable amount, my humble request would be to first of all hold on to your investment, and if you have that investable amount from a long-term point of view, you can add on dips as well. We are positive on the stock.
All right, so a fundamentally positive view coming in for Paytm. But Jigar, what's your outlook on this one? Where are the levels trending now compared to where the IPO opened?
Very good morning, everyone. See, in terms of Paytm, again, the Paytm has a very steep resistance at 1400. And overall, even on December 2025, we saw a massive correction from that particular level. And I think a couple of weeks back, again, we got a rejection from 1400 mark. So as of now, any bounce toward 1300, 1400, so we would advise to book partial profits and wait for a daily closing above 1400.
All right, any bounce back around 1300, 1400, you can book your profits. But let's move on. We are joined by Meher Chand from Visakhapatnam. Meher, hi, good morning. How are you?
Yeah, good morning, ma'am. How are you?
I'm doing good, thank you. You can ask your question.
Yeah.
Our experts can hear you.
Yeah. Good morning, sirs. I'm planning to have investment in PG InvIT for about 10 lakhs. So can I go at the present level, or should I wait for some more time? Because the bank's rate of interest is much lower when compared to the return, which I have been watching on this particular stock. So I would like to invest about 10 lakhs. Either it should be in the staggered manner, or can I just go in one investment? I would like to have your view on that.
Any specific reason, Meher, why you've selected this particular counter, or you're open to suggestions?
Yeah, I do have a reason. Till now, I parked my funds in my bank account, wherein I'm drawing about only 8.35%.
Right.
So when I watched the dividend part of this particular stock, it's almost 3 rupees per unit they are giving. It's coming to near about 12%.
Perfect.
And I'm also getting the advantage of that, dividend relaxation I'm getting to some extent.
Right.
And relatively, it is much better, I feel. And what would be the case in the long run if I invest it for 10 lakhs amount?
All right, sure. Gaurang, I'll come to you because the intention is very clear. It's the dividend income that one is looking at. And obviously, it's an investment time horizon as well. So what would you comment on the choice, or something else should be considered?
Well, there are a couple of parts to this particular question, and I hope you will allow me 30 more seconds to answer this, Kavita. Thank you so much, and good morning to you as well, Kavita. First of all, we do have positive coverage on the company Power Grid Corporation of India because of the transmission distribution, 75%, almost 75% coverage in terms of across state, interstate, and state versus state distribution of power via those grid lines. Unfortunately, on InvITs, we don't have a coverage, so I won't give any specific buy, sell, and hold, but maybe Jigar would possibly throw a little bit of light on this. Having said that, two or three things, Kavita, for Mr. Meher. First of all, I hope he's got other investments, and this 10 lakh rupees does not form a large exposure to a particular sector and stock, because that again exposes to a risk. Point number. Point number two, whether to put in at parts or whether to put in at one time. So I am of a belief, Kavita, I'm talking about investment into equities directly. Never put everything at one time, and don't put all your eggs in one basket. stagger your investments and diversify your investments so that the risk element gets distributed. Otherwise, you may face some uncertain times in case certain policy changes by the government or otherwise. While the outlook for the power sector is extremely positive according to us, and we've got coverage across board: power generation, power transmission and distribution, like I mentioned, power grid, equity, underlying equity I'm talking about, and of course, power modernized equipment manufacturing companies.
All right, Jigar, would you like to give a take on this as well?
In power grid, definitely yes, he can add at this particular level. There are 2 to 3 reasons. First of all, the price action on weekly structure is at 61.8% retracement, along with 50 moving average of the weekly structure. And on daily chart, if we see, there are multiple bottoms near 280, 290 zone, along with hidden bullish divergence on MACD and as well as stochastic. So definitely we are expecting at least 320, 330 levels within next 2 to 3 months. Overall, the stop loss can be kept below 275 on daily closing basis.
All right, that's the take coming in on power grid, both the equity and the InvIT. We've discussed both of these counters. But the next query coming in is from Shubhajit Jana. The stock in focus is Tips Music. He's holding 80 shares at an entry price of around 661 rupees. He's asking for a sell or a hold recommendation. Jigar, what's your take on this one?
Currently Tips Music is trying to get a steep resistance from 740, 730 odd level. So as of now, I would suggest him to book partial profit between 710, 720. If the counter closes above 740, then only a fresh buy will trigger.
Perfect. Let's move on and let's take this question from Kolkata, Mr. Hector. It's on Oberoi Realty and the entry price is 1860. And he wants to add for long term, almost 2 years. Gaurang, not sure about the stock in concern in your radar, but obviously let's start with the sector then.
Well, Kavita, we do have a positive coverage on a couple of real estate companies, Kavita, to be very honest. So just to name a few, Oberoi Realty as a disclosure appears in our fundamental coverage, DLF, Godrej Properties, Prestige Estates and Shobha Limited. So these are some 4 or 5 odd names in the real estate pack. And all these names that I've mentioned, Kavita, if you look at the industry and these companies, the debt is relatively low or virtually negligible. Most important thing, the run rate in terms of execution of project. So first of all, hold on to your investment in Oberoi Realty. You want to average. My principle or my advice to people who want to average is, Kavita, that unless and until you get a downtick of almost about maybe 5% or more from your earlier acquisition price, you should not average, because that does not come to a conclusion in terms of meaningful average and sizably bringing down your cost of acquisition. And if you do get that 5% or more correction from your earlier acquisition price, for example, if you have 100 shares, don't average another 100. Average maybe 25 or 50 shares. And then when you get an additional dip of another 5% or more, then you go and add another 25 or 50 shares, depending upon what capital you have to invest from a long-term point of view. So by doing this, Kavita, this phased out manner and 5% gradual averaging will bring down the cost of acquisition to a great level. And then the possibility of a profit or a decent profit definitely emerges on the horizon. But hold and average in this way, then you will make a decent lower level in terms of the cost of acquisition.
Got it. So those are the guidelines for averaging out on your current holdings. Thank you so much for that. The next query that we've got is from K. Setu Madhavan from Coimbatore. He's holding 48 shares of L&T at an entry price of 4,050. And he wants to know if he should hold or sell. He should hold or sell. Of course, let's take first a technical view on that. Jigar, what's your take?
See, definitely at this particular level, he can add, because currently the stock has closed the gap of 8th April 2026, which was the bullish gap. And there are multiple demand zone at this particular level, which is 3,700 till 3,800. And overall, since last 2-3 days, extended bottom with bull divergence is seen on daily chart. So definitely, yes, he can average at this level, keeping a stop loss of below 3,700 on daily closing basis. And overall, a bounce till 4,100 is expected within 1 to 2 months.
All right. With that, it's time for a short break, and Gaurang and Jigar are still connected with us. You can keep sending us your question, and after this short break, we'll join you back with more answers on your stock-specific investments.
Welcome back, and we're in conversation with Mr. Sunil D'Souza, Managing Director and CEO at Tata Consumer Products. Very, very strong set of numbers. Just to kind of give you a perspective, the India emerging business, which is the new businesses of Tata Consumer, have grown at a breathtaking 47%, and now they're over a third of the India business. So emerging is really coming out and supporting the overall numbers. Sunil, great having you. Let's start off with that actually. This kind of growth, this 47% YOY kind of growth, just give us a sense as to how sustainable that kind of a number is, or whether this is like a one-off in terms of performance.
Before I answer that, I'd like to just dial back. Tata Consumer Products was supposed to move from a tea and salt company into a total food and beverage and then a FMCG company. So what you're seeing today is in line with the plan. And we had said we'll grow organically and inorganically. And the growth businesses are a mixture of that. Whether it is Sampann, which we grew organically, or Soulful, Capital Foods, Organic India, all of which was inorganic pieces. We've always guided for the growth businesses contributing to at least 30% of India growing at 30%. Once in a while, you will hit it out of the park. And probably this is one of those quarters. Today, the growth businesses account for 36% of the India business and have grown at 47%. The good part is all the growth businesses have fired, right? One of the things, Sampann grew at 58, the ready-to-drink grew at 41, Capital Foods 40, Organic India 27, Soulful 25. So all growth businesses come to the party. The good part is not only that, gross margins are healthy. Sampann, just to rewind 5 years, 6 years back when we started, it was a -5. Today, it is a +15. Capital Foods, Organic India are significantly accretive to the total business. Yeah, so overall, we remain bullish about the 30% plus contribution. Today, growth businesses, at least for the last quarter, are higher than tea and salt. Ultimately, they will continue to climb faster because tea and salt inherently will grow to high single digits. And this will continue with the 30% growth.
My understanding, Sunil, excuse me, and you can correct me if I'm wrong, was that the growth for FY27 on emerging was expected to be 30%. This hitting it out of the park with 47, one-off quarter, as you call it. Do you believe that that kind of gives you the confidence to up the kind of growth guidance on emerging alone?
So let me put it this way. Internal targets operate on a different sphere. Externally, we would like to condition for a 30% growth. And the good part is it's when you say growth businesses, we've taken certain categories as targets, right? We've taken premium water, dry fruits, noodles, and cold press oils. Overall, these businesses are growing 90% versus last year. These are our big focuses. And these focuses have been shaped with looking at the category margin, competition, growth rate, and trust deficit, right? And that's creating magic. We spawned new channels in the last 24 months or so, whether it is vending, food service, or pharma. And those are on a 300 crore per year run rate as well. So Tata Consumer Products is a growth company, growth-oriented. Yes, we are lower on EBITDA margins. And the guidance is we will grow EBITDA margins by 50 to 70 bips every year. This quarter, we've delivered 70%, and we remain focused on that.
Right. And with regard to how is, just if you can give us a sense, how is volume evolving on the growth businesses side of things? I'm not sure that you've put this number out, but if you can give us a sense just to kind of understand that off the lower base that some of these businesses operate out of, are volumes extremely strong? And is that kind of volume clip likely to sustain? How is channel mix really evolving out there? If you can give us a perspective on that.
So first of all, overall in the business, we delivered a 13% UVG. I think 13% UVG by any comparison is a decent number. A lot of it was driven by growth businesses. This is not pricing driven growth. All the growth businesses have grown 30% plus, right? Ready to drink, for example, I think was a 35 volume and a 41 value. Similar story for Capital Foods, Organic India. So it is broad-based volume-driven growth. See, price-driven growth, you can take it up to an extent, but you can't deliver 30, 40% top-line growth just basis price. It has to be fundamentally distribution, marketing, innovation, and volume-driven growth.
Absolutely. And Sunil, that's what's really impressive about the performance this time. And some bit of tailwind, of course, from growth businesses on the margin number, but you've not tweaked pricing, and despite that, you achieved this kind of margin. Give us some perspective on when do those price recalibrations start to happen, and what would the impact of that on margins be? And then very likely, the 50 to 70 bips annual will get beaten, right? I mean, in terms of your own guidance.
So number one, we remain, it's a fine balance between volume and value, right? There is a little bit of inflation creeping in, and we've been taking calibrated moves. Tea is showing, we had expected tea broadly to be benign this year, but it's showing about a 7 to 10% price hike. We've taken small bets last quarter. We will continue to take small bets because for tea and salt, we remain laser focused on maintaining between a 34 to 36 gross margin, because that is the sweet spot where we've seen volume continues to chug along, market share continues to chug along. Salt, we've taken a 2 rupees per bag increase last quarter. We moved the bag price from 30 to 32 when we saw Indonesian coal and the rupee dollar changing. Going forward, we will continue to balance volume value. Like I said, we will remain focused on making sure we operate within a certain band on gross margin and delivering top line growth. Overall for the year, if inflation was not to spike up, and this is a big if because, I mean, you never know, it changes by the day. We should be able to beat our guidance of 50 to 70 bips increase. Most importantly, because it's not only the portfolio moving, there is premiumization happening within the portfolio. For example, dry fruits, we moved to salted, in salt, 13% growth in value added. So that is happening. And as we grow larger and keep the middle of the P&L tight, we will get scale leverage as well. Last year, we delivered 220 bips of scale leverage. This year also will deliver scale leverage, but when you look at the P&L by alone, there is a lot of moving parts in it, a lot of noise, including forex, hedges, all that kind of stuff. But if you strip that out, we will deliver scale leverage.
And Sunil, if you can give us some color on when the price recalibrations start to play out for you, how are you tactfully trying to pass that through to the consumer?
So on salt, we took it early June. So the consumer would start seeing it now. It starts coming into the P&L middle of June onwards. So that will happen. Tea, small pieces tweaked. You could expect more pieces being tweaked as we go forward. I would say I wouldn't give it a timeline because we remain. So, for example, oil went from 70 to 100, and then now it is down to 92. And when the ceasefire happened, it came down to the 60, 70 mark, right? So I wouldn't try to get ahead of myself by trying to forecast this thing. We're just mindful that we're not taking prices for a one-off event, and the inflation is here to stay for some time, right? So that is a wait and watch game.
And what was a knock, if you can give us a perspective, of tea on your cumulative, on your blended, on your total margins? What would that knock be? Because the inflation was strong, from what I understand.
No, for last quarter, there was no knock. Last quarter, actually, when I compare it to the same quarter last year, we had tea prices which were lower. And that's the reason why you saw 2% volume, but a 4% value decline. But the margins remained in the 34 to 36 band. We gave back pricing as we saw it. Now we're seeing the reverse trend and we will go up. But overall, just to give you a perspective of last quarter, impact of overall I would say, define it as the West Asia led inflation was about 60 bips. So if there was no inflation broadly, my 13.6% EBITDA margin would be north of 14.
The other thing that's driving that margin number crucially is branded versus unbranded. The performance of branded has been very solid, Sunil. How do you see over the medium term this evolve, this branded versus unbranded mix? Just India business, if you can give us a perspective first off.
So the unbranded business will not grow as fast as India branded. If I look at it, we've got three parts of the portfolio. We've got India branded, which is core and growth. Then we've got international and we've got unbranded, right? But the India growth will grow the fastest. India core will grow faster than the others. Overall, international and unbranded, the role is more to make sure they're margin accretive. The drag this quarter was as coffee prices came down. We had to give off pricing. But remember, again, we are more or less a pass-through out there, and therefore margins were not as impacted. The revenues will keep going up and down in line with coffee prices. The good part is we play both sides of the coffee, right? Our US business is on the consumer side, and there you'll see margins expanding as coffee prices now go down. Whereas the solubles business is a pass-through business, and the revenue will come down or go up in line with coffee prices. But overall, it's the India-based business which is the which powering the growth, led by the growth category.
And packaging costs, some of the other raw material costs, right? Not directly associated with the product itself, but packaging and the like has also crept up for you. How should one look at the cost levers there, and how much do you pass through? How quickly? What was the margin impact? Could you give us some color on that as well?
Yeah, so like I mentioned, last quarter, there was a 60 bips impact of all-in inflation. Primarily, I would say it's freight, fuel, and packaging. Primarily packaging. That's the big element. Where it has started to impact, we've started to pass this through. When I mentioned that we will take calibrated price increases, it is not only for tea cost, it is for overall inflation also. Fuel and freight would be a relatively smaller portion. I would say 80% of the inflation would be packaging. And in food and beverage, packaging plays a larger part. So we will look at calibrated price increases. As I said, the guiding principle is we play within a certain gross margin band, but keeping in mind the competitive scenario as well so that we don't lose market share.
And channel behavior, talk to us about that. That's the other lever where you push volumes out. What really stood out this quarter? What can you do better as the year goes by?
So I would dare say we are one of the fastest movers when it's going with the channel shifts per se. For us, trade grew low single digits. Modern trade was up by 20%, and overall my e-com business was up 51%. Now e-com, there is a move from everything moving from e-com to quick com. So e-com plus quick com grew by 51%. Overall, I would say we are seeing a shift of the consumer. Indian consumer is becoming omni-channel. So on a particular day, they might be shopping at quick com. When they have time, go down to the kirana, and on the weekends probably go down to modern trade also. So modern trade, e-com, quick com will grow faster than GT, and that's what we're focused on. Just to give you a perspective, the percentage of online, which is e-com plus quick com, has moved from 15.4 to about 21%, 20.7 or so. And I would expect it to continue to creep up, because if you look at a benchmark market like China, it is significantly above where we are. So as quick com and e-com becomes prevalent, consumer will move there. We are well poised because we are one of the first movers. And as the channels grow, we will get leverage on our spends in those channels.
Sunil, just the last piece, if all these years were about building, FY27 seems to be a year where you're starting to see execution play out and very meaningfully on the numbers. Q1, if it's anything to go by, it's a fabulous start. Would you say that FY27 is that inflection year where you start to really pick up where some of the engines are concerned?
So I would say every year is a landmark year. We've been delivering, if I'm not mistaken, for the last 3 years, we've delivered a 13% top line, 13% EBITDA. EBITDA could have been better, and net profit is roughly about 25. So Tata Consumer is focused on top-line growth and delivering EBITDA margin expansion. Last quarter was a good quarter. We brought down even working capital by 4 days. We've upped our ROC by 150 bips. We've delivered 70 bips of margin expansion and top-line growth, and the growth businesses have started to fire.
All right. Okay. Sunil, thank you so much for coming in and speaking to us.
My pleasure. Thank you.
Good conversation. Thank you so much. Stock perked up nearly 2%. Back to you, Kavita.
All right, thanks for that, Harsh. And it's time to get a technical also and a fundamental take from our experts, Gaurang and Jigar. Gaurang, I'll come to you first. Strong set of numbers, but at a consumer, what's going to be your fundamental take? I think you're on mute, Gaurang.
I beg your pardon, Kavita. I'm so sorry. We've been maintaining a positive stance on Tata Consumer for a very long time. And as the management was speaking with your colleague and my good friend Harsh, and the verbatim that has been shared, and the optimism in terms of the recovery in demand, not only from metros, Tier 1, Tier 2 cities, but also from semi-urban and rural India. My sense, Kavita, is that, see, India was a consumption-driven economy. India is, and India will always remain, Kavita. And that's one of the reasons why the who's who in the world, in terms of big players, wants to come and set up the shop in India. Positive stance on Tata Consumer. If you have it, hold on to it. If you don't have it, you can definitely go and invest.
Perfect. Jigar, what's going to be near-term targets and if a stop loss that you might want to recommend? Also, can a buy call be initiated at the current levels?
Definitely, it's a buy because since last I think 1.5 months there is a consolidation between 1080 and on higher levels 1100. So basically, the stock is placed somewhere between 61.8% retracement and 78.6. So overall, there is a double bottom structure with divergence. So definitely, it's a buy at current levels. Even if we get a dip below 1100, then also it is a buy. And stop loss would be somewhere below 1050 on daily closing basis, and overall target can be expected till 1200.
All right, that's the view coming in for Tata Consumers. Looks like a pretty solid buy recommendation coming in from both the technical and fundamental perspectives. But let's jump right into our WhatsApp queries. The next one is coming in from Kishore. He's holding about 500 shares of Motilal Oswal at an entry price of 650. Looks like he's making a tremendous profit on that as well. Over 1 lakh worth of profit is what he's sitting on for Motilal Oswal. He's looking for a recommendation whether he should sell or continue to hold for a shorter period of time. Jigar, what's your view on the stock? Do you see any further upside or should he continue to book his profits?
See, first of all, in Motilal Oswal, again, the steep resistance was somewhere just below 1000 mark, 990 to be more precise. And this is once again the historical level from October 2025. And we have seen multiple tops near 1000 mark. So as of now, any bounce up till 900 or above 900 should be considered as a profit booking, and keep a stop loss below 850. If counters goes below 850, then definitely one should straight away book entire 100%.
Stop loss of 850 should be maintained. Let's move on. And Gaurang, this question is specifically for you. This is from Rema from Chennai. 3 stocks and holding time is almost a year. HDFC Life bought at 605, SBI Cards bought at 668, and Supriya Life Sciences bought at 925. Can hold for a year's time frame.
So I would request Rima to extend the time horizon, Kavita, because there is a lot of uncertainty. Of course, out of the 3, we have coverage on 2, HDFC Life and SBI Cards. On the third one, unfortunately, I don't recollect whether we have a coverage or not, but on the sector, we remain extremely positive in terms of healthcare, etc. So extend your time. If you have time by your side, I think it will be much better if you extend your time horizon from 1 year to maybe 1.5 to 2 years, but stay invested in these 2.
All right, so that's the take coming in on the 3 stocks. Next up is a query coming in from Leela Manusha. Stock name in focus again is HDFC Bank. I think we've gotten a fundamental view on that already. Gaurang, thank you for that. Jigar, can you tell us if you've got a fundamental view on HDFC Bank?
HDFC Bank, once again, there has been a very broad range of trading, approximately from 8:30 till 7:30, 7:40. So currently, stock is somewhere near the levels of 7:30, 7:40 zone. So as of now, the divergence is developing slowly. That is a bull divergence. So definitely one should buy at this particular level and keeping a stop loss of below 725 on daily closing basis. And overall, we are expecting once again the bounce back till 780, 790.
Okay, we have a live viewer on the phone line, Mr. Prajapati Narsingh. Hi, good morning. How are you, sir?
गुड मॉर्निंग मैम मैम मैंने अदानी ग्रीन का स्टॉक खरीदा है
ओके क्या प्राइस पे?
मैंने 855 पे खरीदा था मैम
855 या 955?
855
855 ओके मुनाफे में हैं आप तो कांग्रेचुलेशंस
थैंक यू मैम 100 क्वांटिटी खरीदा था मैम हाँ तो अभी उसका क्या मतलब टारगेट रहेगा और स्टॉप लॉस क्या
कब तक रुकना चाहते हैं और
रुक सकते हैं मैम नो इश्यू
सॉरी
लॉन्ग टाइम भी रख सकता हूँ मैं
ठीक है सो लेट्स टेक अ टेक्निकल एज वेल एज अ फंडामेंटल टेक जिगर आई विल कम टू यू फर्स्ट
Say first of all, in Adani Green Energy, we need to look at since last 3 to 4 months, we have already had 100% rise in the stock. And recently, the stock has taken out the bullish trend line and comfortably trading below 1480. So any bounce till 1500 or 1450 should be considered as profit booking. We are expecting at least a deeper correction till 1200 or even more than that. So as of now, there is no point in holding entire 100%. Any bounce till 1400 or above that should be considered as at least 40-50% profit booking.
Gaurang, just in case, any increase in the time frame?
So, Kavita, well, what I would request, can I answer this in Hindi? Because I believe Prajapati ji had asked the question in Hindi.
Yes.
For his better understanding, if you don't mind. So, Prajapati ji, पहले तो आपका निवेश एक अच्छी कंपनी में क्षेत्र अच्छा है ऊर्जा और हरित ऊर्जा यानी कि क्लीन एंड ग्रीन एनर्जी। दूसरी बात यह है कि आने वाले कुछ सालों में सरकार के तरफ से जो योजना है नई ऊर्जा उत्पादन खड़ी करने की, खास करके हरित ऊर्जा यानी कि क्लीन एंड ग्रीन एनर्जी, वो क्षमता कुछ 300-350 मेगावाट से बढ़ने वाली है, ऐसा कुछ रिपोर्ट्स में लिखा हुआ था। और 75% वो नई ऊर्जा जोड़ेगी, वो शायद हरित ऊर्जा होगी, ग्रीन। उस परिस्थिति में अडानी ग्रीन और बाकी अन्य जो कंपनियां हैं जो इस क्षेत्र से जुड़ी हुई है, उनको बहुत बड़ा लाभ मिलेगा क्षमता विस्तार में और कारोबार करने में। खरीदारी करने की, बेचने की या बने रहने की तो राय नहीं दे पाऊंगा अडानी ग्रीन पर, क्योंकि फिलहाल कवरेज नहीं है, लेकिन एक सक्षम और मजबूत कंपनी है इस क्षेत्र की।
All right. Thank you so much for your views on Adani Green. I hope your query was answered as well. Moving on, we've got Khurshid from Delhi asking the next question. He's asking for the right price to buy Vedanta Power. Jigar, what's your take?
See, in terms of Vedanta Power, again, the kind of structure we are witnessing, we already have a very good correction from 49 till almost 34. And on couple of like a 1 hour chart or 2 hour chart, there is an extended bottom and continuously the price structure is trying to make some divergence, and overall we are expecting up move till at least 41, 42 within next 1 to 2 months. So definitely it's a buy at this particular level and keeping a stop loss of below 34 on daily closing basis.
Perfect. Let's move on. And the next question is from Mr. Kannan, and there are two stocks. Varun Beverages bought at 510. Wants a technical view on this. Okay, one more stock. Good entry point for Kirloskar oil as per the charts. Okay. Trigger?
In terms of VBL, VBL, first of all, we need to look at VBL right from March. From March, I think the bottom was 390, and we had a very good run almost till 550, and later on we saw a very good correction. So as of now, the stock is at previous demand zone, breakout zone. So definitely he can add this particular level, and the targets would be 550, 540, the previous major swing high, and the stop loss would be placed below 425 on daily closing basis in VBL. In terms of Kirloskar oil, I think Kirloskar oil, there is a chance of getting some deeper correction because we have already had a tremendous run and overall the momentum is losing on higher side. So as of now, I think in Kirloskar oil, one should wait and watch and keep a trail stop loss of below 2100.
All right, so a wait and watch on Kirloskar oil. The next query that we have is from Neeraj Verma from Assam. He's a senior citizen. He's asking about an opinion on Yes Bank. He's holding 1,500 shares at an entry price of 36 rupees. He's asking if he should hold or shift to some other stock. Gaurang, what's your take on Yes Bank? How do you see it from a risk perspective?
Well, this is honestly a lethal combination. He's a senior citizen and he's invested in Yes Bank. And I hope he's got enough elevated risk appetite, to be very honest, because this bank has shown improvement over the last couple of quarters. But first of all, it is not a stock where a senior citizen can get invested or trade, as a matter of fact. Second is, are there better options than Yes Bank? Definitely, there are one too many better options in terms of private sector banks and public sector banks. More importantly, public sector banks, because public sector banks have shown tremendous amount of improvement in terms of earnings visibility over the last many years. Hard work has been put in place. Gross net NP has come down. Provisioning has come down. Interest income margins and interest income has improved. And along with that, profitability is improved along with loan growth. So there are better banks to look at. Since he's a senior citizen, my humble request is, sir, please protect your capital and health.
Absolutely.
It is very important in this kind of a market.
Absolutely. I think with that, we are timed out on this edition of Buy Now, Sell Now. Thank you so much, both of you, for taking your time out and helping our viewers today. And time to wind up Buy Now, Sell Now, but a short break, and post that we'll get you markets at noon. Stay tuned.